Hey guys, John Wick here. I wanted to take a moment to go over my indicator and hopefully answer some questions and give you guys some insight into how I use the indicator. So with that said, let's get started. This is a good view to show you guys the gray bars and the white bars. So let's start with that, and this is on SPX. So when you have these gray bars, what it indicates to you is that we're currently in a downtrend. And the purpose of the gray bars is to keep you in the trend and not to have you shaken out. So for instance, let's play out this move, okay? So you had a squeeze here. You went long on the green arrow. You set your stop to the mid band. I like to set my stop to the mid band or the lower band. Use your own discretion, but that is where I like to set my stops just for a general rule of thumb. So let's say I set it to the mid band. You went long here, it went up, and you got taken out right here. You ended up with a little loss. But the next day, you have a red arrow, and you could have gotten into a short. If you would have shorted, these gray bars would have kept you in the downtrend. You would have had a moment here where everyone thought that we might have been rebounding because this was the crash, right? But we didn't rebound, and it was a fake out. And if you played your short according to the gray bars, this would have kept you in the downtrend, okay? Conversely, when we have white bars, it means that we're currently in an uptrend, or when it changes to white bars, it means that we've changed market dynamics and we're now in an uptrending market, okay? Now let's look at the colored bars, which would be these green bars and the red bars, okay? And what they indicate is momentum. It's simply moving averages. And you can actually change these moving averages in your settings. If you go to settings and you see the 26-day average and I think it's the 9-day average, that's what we're using as the default here. So let me explain how that works and give you a better idea of how I'm using this for momentum. So I put those moving averages on the chart, and whenever price action crosses below that moving average, it gives me a red bar to say, hey, you've crossed below that moving average. Comes up, crosses below it again, gives me a red bar, right? Because it's telling me the momentum is to the downside. Again, conversely, when we reverse, right, and it starts to cross over that moving average to the upside, you will get a green bar to let you know the market dynamic has now changed, and you can start looking for a white bar to let you know that we're in a full-blown uptrend, okay? So just to recap, the gray and white bars and the colored bars are basically a trending method to keep you in the trend and to let you know when the momentum is either strong or weak or changing. Okay. So next, let's go to the volatility squeezes. Okay. This is my favorite part of the indicator, and I'm sure the same is for a lot of you guys. So these shaded areas basically tell you that we're in a volatility squeeze. And when volatility squeezes happen, it's hard to identify them correctly. But if you get good at it, it's very beneficial because it basically tells you that a violent breakout is coming. It's imminent. It's around the corner. Most times you just don't know which direction it's going to break out if you're lucky enough to spot the actual volatility squeeze, right? So that's why I've put these green arrows, and you will have a small green arrow, and a lot of times you'll have a bigger green arrow. Okay, the smaller green arrows are the early confirmation. That lets you know that, listen, if you want to take a little bit more risk and try and get in early, this is the time to do it. So right here, right, you would have got in over there, and you would have still been in this trade on SPX, right? It broke out to the upside. When it does it to the downside, conversely, again, it has red arrows letting you know that, the probabilities are to the downside. And that's how we use that part of the indicator. We can go through some more examples. Let's go all the way over here. Okay. So you can see on this short one, here's one where it broke to the downside just briefly, went below the Bollinger Bands, came back in. A lot of times when it comes back in the Bollinger Band, that can also be a sign for me to let me know, hey, take a little bit off the table. But as I said, it's really, really important, guys, that if you're going to play these volatility moves, that you always my rule is always set a stop as soon as you put the trade on, regardless, but especially for these volatility moves, because when you're in a zone where volatility is about to break out and go crazy, a lot of times you will get a fake out and reversal in these zones, and you got to watch out for that. But better yet, if you set a stop, you can be a little bit more complacent because now you have a maximum risk on the trade. Okay. Again, to set my stops, where I like to set stops is at the middle band or the lower band, breaking through the lower band, depending on what my risk tolerance is, and also when I got into the trade. If I got into the trade and I'm heavy in profit, then obviously I can be a little bit more risky. If I'm still bullish, and the stop will be to the lower Bollinger Band. So hopefully that gives you guys some insight into how I set my stops, and it is really the most vital part of this strategy. I'm going to even call it a commandment just to get your attention. Always set your stops with these trades. So let's see what else there is. Okay, the 8s and 9s. So I did not make the 8s and 9s. This was something I added due to requests. There was a lot of requests that you guys like these 8s and 9s. I view it as weakness and strength, right? And also a shorter term trade. I wouldn't call it a scalp trade. I would call it a swing trade. So here's a perfect example, right? You have this indicating that we're now going to have some strength, and you had it up here too, right? And this is why I don't like to play them. But when they do catch, they can be a nice trade. So you would have got long here and then got, exited your trade over here when you got the weakness 8 and 9 signal. A lot of people will have been also using this to enter the squeeze whenever it goes into a squeeze, and then using these as a sign to either take a little bit of profit or exit the position. Me personally, I do not like to exit positions early on 8s and 9s. I like I like to stay in the trend. So let's look at Bitcoin, because I think that gave me a perfect example of what I'm talking about, wanting to stay in the trade once the squeeze has happened. Yeah, actually right here. So just to review, Bitcoin was a bit choppy and then started going into consolidation over here. And when it goes into consolidation, that's when you need to start looking for the squeezes, right? That's when the highlights will start to show up to say, hey, this is the zone. This is the zone to pay attention. And if you need instructions for this, the yellow zones should tell you, hey, your eye should be drawn here, and I want you to watch for any other signals, whether they might be 8s and 9s, but specifically the arrows, okay? So you have this zone here, you started paying attention, you have your 8s and 9s here. I would have not gotten long, and I did not get long here. But it does tell you, hey, listen, we're in a volatility squeeze right now. You've got some 8s and 9s. Maybe the probability is to the upside. So you should start thinking that. Then you get a arrow here and an arrow the very next day. Guys, when you see this, these are clusters, and you can't get a better signal than having multiple cluster arrows in a row. And not only did you have that, but you had momentum. Look at this. You had a green arrow letting you know that the momentum is now switching to the upside. You've got 2 green arrows, and just before it, the 8s and 9s let you know that strength is building up. If you can't buy a signal like this, it doesn't get any more clearer, guys. I mean, honestly, right? So let's say you went long, right? I had some mods talk to me about these 8s and 9s. It prints at a 9. Maybe we should take profit. And yeah, that was a good place to take profit. That's a good trade, right? But for me personally, once again, I like to stay in these trades a little bit longer. So I I do not take profits at the 8s and 9s, but they do let me know that I should pay attention and start looking for any other signals of weakness or signs of weakness, right? So yeah, and it looks like we're still in the trade. Haven't gotten out here. Let's look at Ethereum. I think Ethereum probably has the prettiest chart when it comes to these squeezes that we are able to identify now. Look at that. Look at that. Okay, so you go into a squeeze here, same thing, you get your 8s and 9s, letting you know, hey, possible strength in a squeeze, most likely a breakout to the upside. Then you get your momentum, okay, your moving average crossover where the price action has crossed over that moving average, letting you know momentum is now swinging to the upside. I mean, these colored bars, once inside a squeeze, can also be a signal. Although if we're in consolidation, sometimes you can get a lot of chop, right, as it moves up and down above and below the moving average. So know that, but a lot of times, right before the move, you will have that momentum playing out and letting you know, this could be it. Taking it all together, it was a very clear signal once again for Ethereum. Okay, you got your arrow, your momentum, and your 9s. I don't have any more signals on this setup. I mean, this is it. You're in it. This would have been a good place to take profits. It did consolidate just a little bit for a couple days before the big players said that, we're not done. We're not done with this. And I don't think Ethereum's anywhere near being done. I think all these cryptocurrencies are going to take a correction that's going to shake everyone out at some point. But we can get into that, later on. I think this is a good start video to give you guys some more insight on how to use this indicator. And with that, I'd like to wrap up. Before I wrap up, though, I'd like to give a shout out to specifically to Billy. Guys, Billy has helped me so much. So please make him feel important because he's important to me. And Billy, if you're listening, thanks for the help on this indicator, bud. I appreciate your time. All right, guys, take care.